If you're like most people, you want to be a successful investor, but you're not sure how to go about it. In this video, I'll be sharing with you 7 tips that successful investors use to be able to build wealth, save money, and pay as little taxes as possible. The reason for doing that is to be able to build generational wealth so that their kids and their can be able to live off the wealth that they have created. So, are you ready? Let's dive in. Many people talk about investing, but to be able to be a successful investor, you need two things: money and time for compound interest to do its magic. That's right. So, these two things are very important for the magic to take place. So, I'm going to share with you 7 tips that successful investors use to amplify time and money to become the successful investors that they are. The very first thing that they do is to create a plan. You need a plan. You need an investment plan. Why do you want to invest? What is your reason for wanting to be a successful investor? You can't just say, I want to be a successful investor. What is your motivation? Do you want to build generational wealth? Do you want to be able to live a certain lifestyle? Do you want to be financially free? What is your motivation? What is your risk tolerance? Risk tolerance is different for everybody. For example, you might have a single mom who has a one income, and you have a couple who has two income household. They're going to have different risk tolerance because the amount of money that they're able to lose if their investment doesn't go as planned is different. So assess your risk tolerance. Then you move on to your investment strategy. Where do you want to invest your money? Do you want to put it in the stock market? So you have to think through your investment plan. How long do you want to put your investment in for? Where do you want to put your investments? So all of that are going to go into your investment plan. So make sure that you develop an investment plan that takes into account your risk, your values, and your investment goals. The second thing is you need to follow that plan. You cannot make a plan and not follow through with it. Then there's no need for you to make the plan, right? So successful investors stick with their plan no matter what. Yes, especially when the market is not acting right. All right. So when the market seems bumpy and things are not looking like they should, do not be tempted to make emotional decisions. Do not pull your investments out of the market. Think long term. If you are afraid of the volatility, then you should diversify your investment. One thing successful investors do is to save to invest. Remember, I said you need money to be able to invest, right? You do not want to borrow from your credit card to invest because that is a recipe for disaster. And that already tells you that your risk tolerance is very low. So you need to be able to save money to invest. And so you have to start thinking about strategies of saving money, like minimizing the amount of money that you spend, decreasing your expenditure, living below your means, picking up an extra shift, increasing your income. So things that will help you save money or paying off your debt so that you can have more money to invest. Fourth thing that successful investors do is to minimize trading fees and commissions. Now, those $4.75 or $3.75 that you pay each time you might not seem like a lot, but when you add it up over time, that's money that you could have put inside your portfolio and compound that. That is money that you are losing each time you trade. So successful investors want to keep that money to themselves so that they can make money on that $3.75 or $4.25, right? So try to minimize those trading fees and commission as much as possible. The fifth tip is that they want to minimize taxes. Yes, taxes. And if possible, don't pay taxes. I'm not talking about any illegal activity now. But if you can take use of tax favored accounts like IRAs and 401ks, why not? because those accounts allow you to put in your contributions and sometimes pull out your contributions and your earnings without paying taxes. The nice thing about successful investors is they are very patient. They do not fall for the quick wins. They practice delayed gratification. I'm going to delay getting pleasure now so that in the long term, I'm going to be even more satisfied. So they do not fall for the hype of the shining syndrome. Okay. They are very focused. The long term, I already did what I needed to do. I made my plan. I have a goal in place. I have a strategy in place. They are not greedy. Understand that if they leave their money in their investment portfolio for as long as possible, then in the long term, they are going to come out winners. So the shiny object syndrome is not something that they tend to fall for. So that is something that I would encourage you to practice as well. Tune out the noise and the tendency to fall for what is the hype, what is everybody talking about right now, and just focus on what your investment strategy is. So the last thing is successful investors diversify their portfolio. And by diversification, what do I mean? They own a variety of stocks, bonds, and other assets. So instead of owning a single stock, they might own a stock, bond, and real estate in, say, a mutual fund. So they have a variety of those in a mutual fund. So they're able to control their risk and to be able to decrease any volatility that might happen in the market. So that is something that you can consider as well. So we've talked about 7 tips that successful investors use to be able to build wealth while saving money, paying little on taxes, and saving time as well. And these tips include making a plan, following the plan, saving money so that they have money to be able to invest, diversifying their portfolio, and controlling fees and taxes, minimizing taxes, and lastly, exercising patience. Now, I hope you found these tips useful. So if you use any of the tips, let me know in the comments, and please share the video so that others can benefit from this video as well. And check out the other video that's coming up next. I love you for watching.